Hey guys, it's Will. Hopefully you're having a great day today. It is Saturday afternoon here, actually more of an evening here in Buenos Aires. Hopefully you're having a good one. We are jumping into the markets here in data center stocks, specifically looking at some of the companies that are powering the AI technology that's been getting released here into 2025. What are the top companies providing value to the AI market right now? We're going to go into the different companies, kind of their contribution. And of course, if you have any ticker symbols you'd like us to go over, we can definitely go over them. Feel free to drop them. David says, as the legendary Mills Lane would say, let's get it on. What's going on, man? And we see hi from some people tuning in, and someone's looking at a mining company. Interesting. We can take a look there at that short there. Two Brothers says, hey, Will, what's going on, Two Brothers? Good to see you, man. So we are going to jump in. What are the top companies to watch in the data center market? And why is the data center market a market that we'd want to pay attention to? Well, whenever you're looking at a profitable investment, something that's going to yield a high return, 9 times out of 10, it's going to be based on the values of a company and breaking it down, kind of reverse engineering and saying, what are the companies that make it possible for this profitable company to operate? So you might, for example, when we were looking at the growth in 2018 to 2025 recently with Apple and Microsoft and Google and Tesla and what have you, one of the indicators was what are the technologies that are allowing those companies to grow? And one of the bedrocks that were driving the innovation, maybe not the innovation, but enabling those companies to innovate with computing power and powering AI, were the GPUs of NVIDIA. So NVIDIA then continues to grow and becomes the top company in the world. And so that's not something that just randomly happened. It only happened that one time. Great investors will all agree that there are players that emerge, and almost always they emerge from reliance, or the value that they're providing the marketplace is recognizable and is going to grow the other companies that are there. So everybody tuning in, we're going to go over those companies exactly right now. So Redwire, okay, we see Redwire from Two Brothers. I know you're interested, but UEC, how do you know I'm not interested? What's going on from Saskatoon? Good to see you. Robin says Bitfarm, let's go. Okay, we take a look at that company. That's on the list, is it not? It's right there. Okay, and then Diddley Dooley says, what's good, guys? What's going on, guys? Hopefully you guys having a good one. And then Luis is here. What's up? Good afternoon, Luis. And Nebius and APLD. Okay, that's an interesting one to start. So the first data center company I want to go into here, it's going to be IREN. We've talked a lot about APLD. We've talked on the surface about Wolfstock, WULF. And primarily on the channel, we talk about, AI and quantum computing and robotics. And but data center companies, we've talked about APLD and ANET. We've talked about CoreWeave. We've talked about TSSI, this company here. And we're also, we haven't talked about IREN very much, but we're going to jump into it because obviously there is a focus on the data center side for IREN, and you see them start to gain some momentum. So they're gaining momentum. They recently were just around $3 or $4 a share back in April, similar to APLD, right? APLD is still around, was around $3 a share at this time. They had that gradual increase and then took off very similar to APLD, surging to $74 a share though, up, and then basically correcting back down to $48. Now, this company, as they've continued this trend, they did break pattern back in October. We saw them break pattern for a minute, along with most companies for a minute. But they're inserting a lot of, let's say, NVIDIA chips, Intel chips, things like that, into their data centers. They got a partnership with NVIDIA, okay, partnership with Super Microcomputer. They primarily handle the racking systems inside of the data centers that actually hold all of the GPUs. And then you got Dell Technologies there as an authorized partner. And you kind of look at the company and see their data center building. They're primarily building over in this area here. Okay, and they've got some operational data centers up here. Okay, it looks to be in Canada. And we're looking at the data center, primarily the data center solutions focused for AI. You see co-location, turnkey co-location data center solutions. Why are co-locations, or what are co-locations, and why are they valuable to the marketplace? I'll give you a good example. If I'm pulling up an analysis right now, let's refresh. And I want to get an AI analysis from our app. So this is kind of an example, right? Why are co-locations powerful? Let's say that we search up this stock IREN, and this is on our company's application here. We're using Grok. We could use OpenAI or something like that. And I search them up. Okay, what's happening? We are talking, I could go to my messages with our team because I was just talking with our development team earlier today, where I'm saying, guys, we're going to have to speed this up. See how it takes 10 to 15 seconds to get an analysis of this company, IREN? It's looking at the financials. It's using the Grok analysis. It takes a long time. Do you know why? It's because we're using the cloud, and we're using AI APIs from Grok, and we're communicating and all this. But ultimately, we've talked about, as a company, it would be more powerful to have our own infrastructure. And how can we do our own infrastructure? Well, number one, so we get the analysis right. Number one, we could purchase our own racking systems and create our own little data center. Or number two, we could do a co-location data center, meaning that we partner with a company to get data center solutions. So does that make sense? Co-location data centers mean they allow one data center to be a tool for multiple tech companies that need that computing power. Why would they need that computing power? Well, we would get the computing power to get that generation time from for the projections of this stock, which, by the way, projections on IREN here, according to our software here, with the projections indicate 10% to about 15%, just given market direction and the technicals, which we can get into a little more. But ultimately, the solution is that we want to get that 15 seconds down to 2 seconds. And by having our own data center solution, we could run models faster and get the customer better experience. And so basically, imagine AI. That's like most companies' problem, is they need their AI to be fast. If we go use ChatGPT right now, it's really fast. That's why they're top AI company in the world. And so the top companies are looking for speed, they're looking for compute, and they're looking for being able to solve problems faster. And so basically, IREN is doing that for companies. There's allowing them to do that. And I see Luis says, BBAI, how are you looking for next week? We could take a look in a second there. Luis, definitely. And then appreciate that one. Thanks for bringing it up. The challenge there is it is defense company. So we'll get through some of these data center companies here in a second. And then we can jump in there to Big Bear AI. NVTS is going to be a player, says Ron. So they're in the semiconductor space, and we can also look into them as well. We'll get through some of these data center companies. And then you got what's going on, Stefan from London. That's awesome. I love to see that. This financial picture for IREN looks really good. We look at the annual financials. So it's kind of like the second piece of the analysis, is that the revenue has been increasing. We see the revenue up to 500 million in 2025, and they're up about 453% on their net income. So you see them increase their net income, increase their revenue by 220%, and increase their balance sheet. So when we're looking at the technicals, and we get those projections, we were looking at the projections a second ago, and we're seeing that according to the models that we're running, we could see IREN up to about $65 to $72 here in the next year. Now that would indicate more growth. With that type of growth, we'd be looking at a margin for profit from here, let's see, of about 15% margin. Now this stock moves much faster, and we might see those levels be hit in the next, day or so, the way that AI and data center companies are moving. But where we're looking for you, where you would want to look for support levels on IREN, you got a support level here right around $60 to $62 a share. That's notoriously been that rising support level for the company. And so we'd watch that level here. You can also see just coincidentally that 200-day moving average, that green line, if we kind of get rid of the drawings here, oftentimes acts as a support when we're bullish. You can kind of see that here from September. You see it holding above that 200-day moving average, kind of making its way up. And then again, that correction took place here about last week. And then when it jumped back up, it's now back above that 200-day moving average and holding above this EMA. So essentially the level to hold above right now would be about $60 a share. Okay, so yes, could we see it continue back up into that $65 to $75 range? Quite possible. Definitely seeing that level as the next target for bullish data centers. And then as far as overall valuations, the company is still trading right now at a valuation of around 17 billion. So they could potentially trade for, if there's 17 billion, they got about 3 billion in assets and on track to do about 500 million or more, actually double that, $1 billion in 2025. Then their fair value, even with their market cap, still seems high. PE ratio is high, 161. So I think while you could see that level of up to $70, $75 a share, I think that's probably the stabilization price over the next 6 months to a year, but we could see bigger corrections on IREN. And I think that would be expected. The reason why is because we could see the next projection here up in that $70 range, but the support level there is basically the only thing kind of keeping it from selling off. The fair value indicates it actually should be around $50 a share or so. And then as they continue to build their revenue, they can get back up into those levels. But again, they're holding at $60 a share. So kind of watching that $60 support is key. And maybe we see them continue up. That's just kind of how it looks right now. Okay, cool. So to Estrecho in Buenos Aires, dream concert for me. Enjoy the trip, Will. Hey, appreciate it, man. Thank you so much. Yeah, it's there's some concerts here in Buenos Aires. It's very nice. The next data center company we've been talking about here quite a bit is Bitfarms. Okay, so Bitfarms converted from primarily doing Bitcoin mining and more cryptocurrency into the data center realm. And we had somebody, who was it that just said, they said, oh, let's take a look at Bitfarms. Robin says, let's take a look at Bitfarms. So again, when we're looking at this company, they've also recently pulled back from $6 a share back down to around $3.70 and then starting to recover. They kind of broke pattern in that hyper bullish trend. And now we see them start to keep what is a slightly more conservative uptrend. Looks pretty good there. And they recently bounced. And you can see them start to hold that level. Now they're still kind of looking bearish. Kind of see this rejection currently since about October 15th, when they reached that high of 660, they got rejected here. And you see them getting rejected now. This company is very valuable in terms of infrastructure for big tech. When we're looking at what big tech is looking for, you're looking at the data center side. You're going to want to see that they have data centers built. This company specializes in data centers that are positioned very well for power. Kind of look at their North America data centers. They got North America and South America. You can see their different kind of compilation here of all of the mini data centers that they have set up in different locations, and how they're kind of offering that power, offering those the compute to other companies. And for investors, we look at their press releases. Let's take a look. The market's big, obviously, powering AI, powering potentially some blockchain infrastructure here as well. They have been raising money. See them closing $500 million in convertible senior notes recently, another $500 million back in October 16th, and then before that, a $300 million conversion there. And then you got not any big partnerships other than August. We saw this announcement for a partnership with T5 data centers to advance HPC AI development at Panther Creek campus. And so they're building data centers. This is a commitment following a recent White House commitment to $90 billion in AI investments and intersect our 1 gigawatt pipeline in Pennsylvania, positioning Bitfarms at the opportunity, driving development and delivering long-term value for the shareholders. I like the way that they talk. I like how they kind of bring that shareholder service to their news articles. I feel like they're communicative, and they've kind of gone from the Bitcoin primarily mining to now into the data center side. Guys, this is what AI is running on. It might not be pretty, it might not be the most beautiful. How many of you guys have you ever like done research and you're like quantum computing and you're like, that's so sexy, and you're looking at all the quantum computing, and then you look down to the level of what quantum computing looks like? And if you've ever gone to a conference, which I've been to some conferences this year, it looks like very complex computations that are really almost mind-boggling and dull to sit through and see them go through in demonstration unless you really understand what's going on. And like the same thing is true for data centers and things like that. Like when the average person says, yeah, look at the data centers and this, and you're showing a picture of this, I don't know how interesting that is, but it's like that's basically what the back end or the foundation kind of looks like for driving innovation in AI. Because AI runs on power, kind of looks like these huge warehouses with all of these, data centers, and that's kind of like where AI is running. And so it's not always pretty. It's kind of the same thing. Like when I went to that conference recently, I spoke with IonQ for that quantum conference, and like I'm there for hours, and I was very excited, and it's like quantum computing and this, but like you go and you see all this like super advanced, almost incomprehensible calculations. And the same thing's true with the AI. So sometimes it's like hard to understand, but basically, what you need to know is more investment from big tech in that underlying infrastructure for powering the AI. And then you also have conversation around, oh, is AI a bubble? AI's this, it's all hype. But the reality is the real world usage of AI is tremendously helpful. And anybody that says that it's a bubble or it's like this like scheme of going around and OpenAI pays for this and NVIDIA pays for this, those are all just kind of distractions. And honestly, they're conspiracy theories. And if you look at simple terms of just cause and effect, value to the marketplace, who's going to get compensated in life or in business, the people that bring the value. And then you look at the value from the companies and you're saying, okay, that saves a lot of time. That's an AI tool that basically runs what a lot of humans are doing. And that's something that we probably don't need to be doing. And AI is automating this and automating that. And it is real world value. And it's valuable if you're able to provide those AI infrastructure and enablements. And that's exactly what these companies do. So essentially, that's kind of where the value is there. And then when we look at other companies like another one, TSSI, and this is kind of one I've recently entered some long-term investments in, they've been volatile recently. We saw them pull back down to this level around $15. We're looking for a 25% bounce on that level around $15. This is ticker symbol TSSI. And they ended up bouncing, of that 25% projection, they ended up bouncing about 17%. We actually caught a really great trade, and I almost missed my flight. It was kind of scary because I'm sitting there and I start the live session feeling good. I had Starbucks coffee. I'm sitting there, starting the live session with all of our stock mates in our daily live trading. And I think I was at, Atlanta airport or Denver airport. And I'm sitting there and I start going and I get into it and we're trading, and 30 minutes in, I look over at our gate and there's nobody at the gate. And I'm like, oh my gosh, I think I missed my flight, guys. I got to go. And it was a really profitable trade on TSSI. It was actually this, let's see, where was it? It was this position right here. We were trading this overall uptrend with TSSI, and we bought down here around the $17.50 price point, and it shot up to about $20 a share right at market open. It was right here around market open, and we were able to catch it. And I look back at the gate, I close my laptop, I say, guys, I'll see you in the next live session. And I walk over to the gate and they're like, William Smith? And my name's William Richard Smith. For you guys, some people is like, why do you have the name Will? Is that your real name? William Richard Smith, my name. Everybody calls me Will Rich because Will Smith is like impossible to remember. And also my grandpa gave me that name, Rich. So I use Rich because I like it as well. It's also fitting for the financial industry. But anyway, I get there and I'm like running on the plane. Basically, they're like, yeah, we were just about to close the doors, and I get on and my wife's sitting there with all of our luggage, and she's like, oh, there you are. I was like, you didn't let me know that we were getting on a flight. And she's like, yeah, she's like, oh, did you almost miss it? I was like, yeah, I almost missed it. And she almost flew to Argentina without me. Oh, it was so funny. But anyway, TSSI was the company we're trading. Why were we trading it? It's because the data centers, like the actual building of the data centers, that's one thing. Then you have the actual GPUs, okay? So the actual like computers. But then you have this whole other industry, which is the actual setup of these data centers. And so TSSI kind of does the like technical, the cooling of the GPUs and the racking systems and the actual moving, like say a tech company wants to move from California to Austin, Texas, or move from, Arizona to North Dakota because Arizona is really hot and they're saying we're spending so much with trying to keep the heat down. Let's just move to a colder place. They want to move their data center. This company helps with kind of the startup, moving to a different location, the cybersecurity, the actual setup. Their PE ratio is still a tad bit high, not nearly as much as IREN. They're at 52. It's not high comparatively to most AI companies right now, but according to Warren Buffett, he's always looking for a PE ratio of around 20. So it's still a little bit high, if you're looking as a value investor. But they've had some momentum recently. Annually they're seeing increases. They jumped, they got up to 150 million in revenue in 2024, and then their positive net income jumped up again in 2025. They're on track to do over $300 million. And if you look at their balance sheet, they still don't have a lot of equity. Their assets have surged, but their liabilities have jumped just as much. The value, though, that they're bringing, why this is good, is because their revenue is increasing. And so balance sheet aside, they're actually building some good partnerships over here with the tech companies that are, they might have experience, but they're saying we need to set up. And I was just, luckily, I have a super blessed situation where I work, like our team and our company has really great software engineers, really great. And they have experience with this stuff. So when we set up our own racking systems and our own data centers for our AI software company that we're running right now here, that we're just getting projections, which we should probably get some projections on this company as well. Let's do it, TSSI, and we'll stick with Grok for now. They are good at that. But if you don't have software people that can do that, you need to pay a company to set up your data center. It's too complex. You got to pay a company to do all of this connections and make sure that the, you got a modular setup, you have racking systems, cooling systems, you've configured all of your racks, you got the IT infrastructure together, all those things that are problems or are not easy solutions always, and you got to have experience to do it. They do that for companies. And so they've had success. They've seen a demand, obviously, with the AI. And so they're seeing some growth. Pretty simple website. They're very much focused on their customer here, not about investors. They have an investor relation setup. But when I go to the company and I'm doing data center moves, it's kind of like, here's the intake form. Are you moving data centers? Here's what you need to do. It's not a fancy website. It's not really nice. But honestly, that's how they keep their business. As a founder myself who has a company that would be interested in services like this, I'm putting in my name and email, and I'm probably looking to talk to sales and, start talking to them. So even though it's not super pretty, hey, they got good revenues growing. They're in a good market. They're recently pulled back down. They were at that $32 price point, and then they sold back down into that $15 price point, started to recover, and they're looking, the next target here as they kind of broke back out of that downtrend, is up into that $21 range, which is a 32% increase we're anticipating, and they've already made 25% of that. So potentially looking at another level here of about 15% margin for profit to that next level of resistance. And then potentially if they can hold that, that's getting ahead of ourselves, but we look for, a value growth in the data center company of up to around $30 a share. That's how that looks. And when I was first discovering data centers, I didn't think that there was, you think about a data center company, you think about AMD, or you think about NVIDIA. Maybe you think about NVIDIA or AMD. They actually just made the announcement to move into data centers really this last year. I think this is why we were shouting from the rooftops while everybody was calling them the advanced money destroyer. We were saying they're the advanced money duplicator. Get in now. We never said get in now, but I was buying. You could see some of our positions on the right. AMDL's up 142%, and then AMD is up 147%. That's not, I don't know if that's necessarily relevant, but what I'm saying is the whole connotation was that they were announcing back here in 2024 that they were running into this wall in gaming, and they said, look, we're going to jump into the data center market. And basically right after they said we're going to jump in the data center market, that very same quarter was this very magical moment where almost every AI tech company that was reporting and talking in their earnings calls, we're talking Google and Apple and Tesla and all those companies, were saying we're going to invest more in infrastructure and we need to get more on AI. And that there was these memes going around in 2024, you probably heard it, where it was like every earnings call was like, we're investing more in AI. We're building more in AI. AI. How many of you guys remember that like meme? And like, that's exactly why outside of the Starlink partnership, which we really like with AMD, we've been investing in them pretty heavily. And they jumped from $75 a share, and they're now up to $242 a share, closed at $254 on Friday. And so they're up to all-time highs. AMD is absolutely growing. And the reason why, again, is the data center market too. That's really a huge piece, aside from they're doing the chips as well, obviously, but the data center revenue has surged for them too. And so it's not a bubble in that case. When you see that the demand, it's there, it's clear that it's there. Okay, so Duke says, Will, what about LAES? Yeah, what about LAES? The other day we were on a video. Let me see if I can pull it up here. Give a shout out here to my guy Majid. Let's see if I can pull it up here. Can I get it pulled up? Here we go. It was Majid. We were doing he had a video come out with an interview with the CEO, and we were watching it. And I guess a lot of you guys are over on his channel because we did a comment and it got like 150 likes or something like that. Crazy. Thank you guys. but he's been very bullish over on the LAES train, and I really appreciate it because we met at Qubit's conference, that conference where I was able to meet the CEO of D-Wave, and we got to do some really cool stuff at that conference. We did some video and some other breakdowns of some different quantum companies. But LAES really had this tone of cybersecurity and the security side of things for the quantum market. And so data center wise, I don't want to move past it too quick. We went to APLD a little bit, but I'd like to jump into more quantum tech. But basically, what you need to know about the quantum market and where we're at with things there, we're seeing a shift in the market, and it's not you're super anticipating. It's not that you can very much anticipate what's going to happen next. We're seeing volatility where one day they're up 20%, the next day they're down 20%. They're getting to all-time highs, and then someone crashes the market on an announcement related to funding for quantum or something. So it's you have a lot of conversation happening, but no matter what, I think what we're seeing in the quantum market in the long term, this is the next scalability enabler for AI. And I believe that with the recent announcements that came out, I don't know if you guys just saw yesterday, it was Google that came out with more news on their recent quantum developments. And they came out with some news related to their quantum. And I believe that this recent announcement, let's see if I didn't type that very well. I got all caps on. I don't know if it's like searching right. I don't think I'm searching very well. But they are having some more developments in quantum. And Google's quantum computer surpasses supercomputers, and they essentially announced that their algorithm outperforms classical computing and operates 13,000 times faster than classical systems, and that their practical applications are still like 5 years away. But the quantum computers they're expecting are going to enhance AI, and that's why we see big investments. And so obviously the cybersecurity play is a play there. And I wanted to just kind of let you know, for the person that said LAES, Duke, I would say yes. But again, like they said, it's 5 years out. I believe there's a lot more maturity that has to take place in the quantum market for them to stabilize at a price. I think the long term, it looks really great. Obviously, the infrastructure is being built, but the stabilization of a price would be something I wouldn't be able to provide to you confidently. I mean, there is levels of sentiment involved. The financials aren't favorable. They are not very good compared to the market cap. And frankly, the news is so good that it causes this stag growth. It's like a stagflation of sorts, where you have multiple indicators that kind of beat against each other on the quantum market. And then the general overall consensus is that they're going to be a key indicator or a key infrastructure play in the future of technology. And that's the general consensus. But again, from a stabilization point, I can tell you the prices are about as stable as, trapped ion, technology. It's about how stable it is. Okay, so I see some other good comments. Let me just get in the comments real quick, and we'll jump in, see if there's one last data center company we wanted to go over today was APLD. Okay. So one of the recent comments, you got Jazz here. Greetings from Orlando. What's going on, Jazz? Good to see you. Thanks for tuning in. Appreciate you. Elvis, Redwire, and CTM. Those are some defense companies we can definitely jump into. What else do we got going on? We got Johnny Daniels. It says APLD and Wolf stock. So maybe we'll do those two first as we're in the data center market now. And that sounds good to me, Johnny. Johnny, thanks for tuning in. Good to see you, man. J Fremix, XRP. Okay, slightly unrelated, but let's go. Let's see. Two Brothers says, Will, close to where I'm going to school, OpenAI and Oracle just broke ground on a $165 billion data center project. It's a 10-year project. However, I'm not sure who the builder of that infrastructure is. Thanks for the information. That would be worth a look. I love that. JZ, hi, Will, says New York City, Big Bear AI, APLD, Redwire. We can take a look. We'll do that today. I won't get off the stream until we take a look at those, JZ. BMC will make me rich. What's the best way to make BMC 85 rich? Let's see. Do you have earned income and substantial amount invested in stocks? Or are you just starting out? Are there other avenues I can help you? We have, let's see, I have experience in real estate. If you need help with real estate, stocks, I do have a portfolio in cryptocurrency. I can help you there. If you need any help in building a business, we have a business, and we have a software company that is providing value to the market, and that's doing well. If you need any help in building a valuable software company that can help people, what else? I don't know. How can I make you rich? The best book that I'm reading right now is called The Slight Edge. I would say books are the number one thing that help me to be able to make money. Books will keep you from these individual fragmentations of your mind that cut dopamine out. Honestly, people waste a lot of time on their phones, and I've been there before. It's like really easy because these companies design the content to get your attention, and that you actually get more dopamine by switching to the next thing. It's not even the content itself that's giving you dopamine, it's the switching to the next thing. And so I would say avoid like the things like that and build into yourself the ability to read books. Read books that condense knowledge of millions of years, or maybe not millions, but thousands of years, and get it into your brain so you can make decisions. Like, I would recommend things like biographies, or biographies of people that have what you want in life. Like, there's a few biographies that stood out to me. I really like the Benjamin Franklin biography. I would recommend everybody reads that. It teaches you how to be like an inventor, a creator, and then also just like finances. And Richest Man in Babylon's a great finance book if you're getting started. That will make you rich. Oh, The Millionaire Mind by T. Harv Eker will make you rich. Think and Grow Rich will make you rich. Honestly, if you think about what you want, you will get it. Don't make any mistake. Like, good or bad, whatever you're thinking about most of the time will come true in most cases. And so just, I would say, like, learn how to train your mind to think positively about money too. Like, one of the biggest things I had growing up was all my family used to like talk like negatively about bills and be like, oh, the bills are here, or like, oh, we gotta pay this bill. And it was like frustration, right? It's like, gosh. And like, to me, I read this thing in Rich Dad Poor Dad or something where it was like, poor families don't talk about the finances. Rich families talk about the finances at the dinner table. They talk about them everywhere. They don't have any, it's not this behind closed doors thing. It's like a thing where you talk about all the time. I think that really helped like me, and like especially with my wife, because like we'll be like, if we have anything about finances, we don't hide it, we don't hold it, we talk about it. I think that's something that will help you, is like have a positive mindset around it. It's like, we want to talk about it. It's a good thing to do. And that will help you kind of like approach finances like good. You'll be excited to do bills. You'll be excited to get your money squared away, or or make money. And I think that's like really important. You gotta have like positive connotation with money if you want to be rich too. So, all those things hopefully help you out, man. And then, yeah, of course, like tune in the channel. People that are on our channel, we have many millionaires on our channel. We have lots of people that tune in. Stockmates, if you want to learn if you want to be around millionaires, we have 29 millionaires in Stockmates. That's the second link in the description below. And we also have a live session every morning at Market Open. We trade live there. Be wary of like get rich quick schemes, but also realize like that there are literally ways to make money way faster. And sometimes, when people share with you those ways, they're actually like legitimate. And people that put up blinders and like, oh, they're saying I can make money with that. It's like too good to be true. Too good to be true is one of the worst sayings I've heard. Too good to be true is one of the worst sayings because it causes you to like miss really great opportunities. There's been so many stocks that I've looked at in the past and said, oh, they're at that price? It's too good to be true. And honestly, it wasn't, and it surged or something. And I thought, wow, I probably like should have looked at that. That happens all the time. The best investments or the biggest losses are the ones that you miss, right? Not the ones that you invest in sometimes. So anyway, hopefully that's helpful, man. But so Azalain says, I'm signing up for daily live trading this weekend. Anything I should look out for or know before I do? If you sign up for Stockmate, you're going to get an email about 15 minutes right before market open. So check your email if you're looking to get into the live sessions. What else do you need to know? We have targets coming out this week. We have exciting earnings for the different companies, like Amazon's reporting this week. I think Apple's reporting this week. So look out for those targets. If you get into Stockmate, those are going to drop over in the group. That's over here. Kind of looks something like this. Ding, ding. I love talking with our members. Like Daniel, he just switched from quarterly to annual, and I was just talking with him about figuring that out. Or not quarterly to lifetime. He was a quarterly subscriber. And but anyway, yeah, earnings. We're gonna come out with earnings. That's all you really need to know. The learning, there's a calendar. So if you go to the events, you'll see our next live tradings happening tomorrow, or not tomorrow, on Monday. And you get a reminder in your email. So just watch out for that. Yeah, what else? I don't know. There's some good members in the group. A really good focus on investing. We got some members with some 200% in 8 months. That's David. He's been in Stockmate since the beginning of the year. I love it. I mean, what else do you need to look out for? Look out for a phone call, and don't get freaked out if you see a California number calling you, because I usually call the people that join Stockmates. But I 100% call every single member that joins the machine. The machine is the first link in the description. But yeah, anyway, that's what you miss, or that's basically what you miss that other members like look forward to. Yeah. So when it comes to APLD, we're just kind of going into the market here. And what were we looking for here specifically was Johnny was looking at APLD, and you were saying, Johnny was saying, like, how can I invest in APLD? I think he's already a holder, actually. He's saying, what are the levels? So we were last watching this push up to around $35 a share, and we're anticipating a slight pullback at around 2 to 3% down to 33. We did see that pullback after that big push up on Friday. So they're back down to the support around $33 a share. Overall, APLD is looking to continue their uptrend. They're looking to continue back up into this $35 to $40 price range. And they do that because they have a very consistent uptrend. I know it almost looks kind of crazy if you're just seeing technical analysis for the first time. Simply rising support and resistance. And then we had some horizontal support and resistance. These are just very simple levels. Most institutions are going to be looking at stocks with this type of analysis when looking at the technicals. And very simply, we saw them break out to higher highs in a hyper bull trend and then that required some extra analysis. But overall, they corrected back down into this greater uptrend, and we saw them pull back down after a big recovery on Friday. They're now around that $33 share. So they are looking, again, target up to about $35 to $40 a share, about a 15% increase. The market of data centers is seeing growth. That's why they're really growing right now. We see the AI demand increase. They're also seeing some growth related to their deals. They just signed a deal, and I think on the day that they signed their deal, they dropped like 15% or something. And that's when opportunities come, because they just signed another $5 billion deal for investment grade hyperscaler at Polaris Forge 2 North Dakota campus. So again, another $5 billion towards building data centers. APLD has now, if we do the math, let's see, they got 11 billion with CoreWeave. Then they got another 3 billion there. So that's 14 billion. And then they signed this 5 billion. So they got $19 billion in their pipeline right now for building data centers in leases over the next, I believe, 10 to 15 years. So if you kind of like amortize that, and we kind of look at the math there, see what that looks like. You got 15 billion. You're going to divide that by about, let's call it, I don't know, average of 10 years. Let's do 120. You'd be looking at about an extra, is that 1.2 billion per year? So if they jump now to 1.2 billion per year, they're looking at revenue right now is increased in the last quarter. They're up 84% in revenue. 1.2 billion would be putting them, their market cap's at 9 billion right now. Balance sheet is around 2.4 billion. They're most likely going to see growth into the market cap levels of around 15 to 25 billion. That would be the level at which most data center companies or just tech companies in general would be trading, kind of a little bit on a future pace, right? So we're seeing a little bit of a pricing in, and that's how it looks there for APLD. Now, when we open up our eyes though, and we look at the real reason why they're growing too, is because they've been building data centers in cold places. That's attractive because it's really cheap for big hyperscalers. That matters. When you're building a huge data center, the power gets more expensive. So they're building in a cold place that keeps them, more easier to cool. Then you got the wind turbines and the solar that are going to power the data centers, primarily the wind, and then the partnerships with Supermicro, NVIDIA, and Dell, and Intel. And so if you look at their solutions with their data centers, I mean, we're just seeing more demand related to the construction. And so with the recent demand they've seen, I'm surprised that they've been able to pull out multiple billion-dollar deals in this last quarter. And so, we got some positions on APLD. Our position there is up about 125%. And so we actually have some positions over in Schwab as well. And so they were just at $3 a share back here in April. They surged up to $40. So they're up there. I mean, if you take a step back, it looks like, whoa, they're way up there right now. And so, if they break pattern, The long term, though, looks really good for them. Overall uptrend, if we're going to see them continue this direction, they might hover a little bit around this $30 price point, down a little bit further. But again, they're in this very consistent uptrend in this AI boom. You see rate cuts kick in. Oh man, rate cuts along with some government reopening and maybe even a loosening of those tariffs. We see this company doing really well. Yeah, so that's how that looks. Hopefully that's helpful for you, Johnny. I mean, fairly generalized. Wolf stock, same deal. Their valuations, they got some investments from, was it Google? Google's one of the recent investors in that stock. So Wolf stock is at $13 a share. They're a $5.6 billion company and revenues around 47 million. And then the balance sheet is at about 870 million in assets. They're not really as favorable to continue right now because their revenue is still low, but their revenues increased year over year 33%. So they look good. Balance sheet's up 81%, but their liabilities went up way too much. Their liabilities went up by 600%, while their assets only went up 80%. And so it's not really the best balance sheet, honestly, for Wolf stock. They're still fairly overvalued at the moment because of that specific balance sheet move. But outside of that, I mean, the market that they're in is good. The current trend they're in is very consistent. They're looking to continue up. They did bounce that support. They are most likely targeting that $16 price point again, which is about a 10% margin for profit or 15% margin for profit. And then you look at their recent partners. I think when we were looking at their companies, recent partnerships, they had a partnership with Google. Google bought a large portion of their company. Cloud Core, the power of infrastructure. You can see these big infrastructure setups. They got some investors from Bitcoin, or for not Bitcoin, cryptocurrency companies as well. And they're kind of an infrastructure play. Probably a long-term good play. I like to see their company. I like how they do their website and all that. It's pretty nice. But aside from that, again, kind of looking at the news, the press releases, they've had some offerings, 3.2 billion in senior notes, and then they had another 1 billion there, and then 850 million there. I'm surprised they've kept the pricing and they're growing despite raising so much capital. Sometimes it's a red flag when they raise a ton of capital, but other times it's like, okay, they're just building. They probably saw their balance sheet and they said exactly what we were saying. Gosh, our assets have gone up, but our liabilities have gone up way more. We need to increase our cash. So that's what's going on there. James says disrespect. Is there disrespect towards a company? What's going on, man? Quantum says, hi, Will. Please, my name's Tiago. To say hi to Brazil, city Teresina. What's going on, Brazil? City Teresina. Let's go. What are you buying on Monday? Redwire? That's the question. Dude, you guys are so funny. Oh, geez. So, do I know anything about INTZ? Yeah, we've looked at that company. I'm still wondering what James felt the disrespect about. James just commented the word disrespect. Was there something that somebody said, James? From Rio de Janeiro, Brazil. That's so cool. I'm in Buenos Aires right now. My wife and I really want to go to Brazil soon. So, next company, we went through Wolf stock again, projections. They got the nearest rising support around $12 a share. That would be a bearish sell down of around $12.50. And then the margin for profit there, if they continue their overall uptrend, they're looking for that all-time high potential up to 16. I don't know if it's an all-time high, but in their current trend, since IPO, it's where they're targeting that $15 to $16 range, around 15% margin for profit. So how many of you guys feel like you are working harder than you have to analyze stocks? Anybody feel that way? Because, when we go through a stock analysis, every time we go through a stock analysis, what do? Does anybody know? We go through this like 7-step process. We go through the market, we'll go through the real world usage in that market, as well as the profits and the financials and everything. Then what do? We go through the financials, then we'll go through the news, the product, the technical offering, so that's 5. And then we'll look at the risk to reward, and that's about 7 steps. Now, sometimes there's more even micro steps in each step, but generally speaking, like, you're not going to know a full picture of a company unless you at least look at the markets, an analysis of the financials, technicals, and fundamentals, and the margin for profit to risk, like those 3 things, right? And so I already do that, and you guys do that, and we all do that. But a lot of times what I do is I'll actually use this software we've developed, because our software, we can choose the best AI models in the world. We use Grok, OpenAI, Claude, or Gemini, and it maps it out for us. So I can use Grok. And what was the next one we were going to do? Big Bear AI. Oops, not BBAU, Big Bear AI. And we get the analysis then generated for us. And it goes through the press releases, and it goes through the news and the charts, and it analyzes the financials for us. You can see it doing that right in front of me as we speak. We take all of that data, the SEC data, the insider trading, and we plug it in to the model for you, and it does the analysis. So very simple. It's kind of like how I've been able to identify really, really great deals this year. It's been super helpful. Look at that uptrend for Big Bear over the next year. If we look at the next week, though, Big Bear AI has a negative trend for the future here in the next week. Why is it so negative? A couple reasons. You definitely have a little bit of downward pressure, but why is it red for the next week before recovering green? And most likely it's going to be the government shutdowns. Let's pull up Big Bear AI and let's get a look at what's going on with the stock. BBAI is the ticker symbol. They had a really great run into this summer. We saw them surge to $9.39. They've had this overall uptrend very consistently. We started covering them around $1 a share. We got in at about $2.80 average price, and we still hold them over in the Schwab portfolio. They are currently, they pulled back from $9.39 back down to the $6.25 range. So what we're looking at is now they're around $7 a share, holding above the support here around $6.50. Now the $6.50 support level near support is pretty strong. We've seen them bounce there a few times, but we're looking for them to really continue actually this trend, get back up into levels like this. I know, the downward direction is one thing. They were able to find support there, bounce above that EMA. The risk here is that support around 650. If they can't hold that 650 support, then we're looking for conservative sell downs into that $5 range to kind of continue the overall uptrend. But generally speaking, how we invest in them, we're looking for this bounce here. We're going to have a clearer idea at market open. If an opportunity presents itself, we see it sell down, we'll most likely be looking for an entry. If the scenario is right, we see things, because why we want to look for market open and why we go live at market open is because that's when the biggest moves oftentimes happen. If I go and I look at the 30-minute chart and I could look for the biggest dips before recoveries, this is a dip right here. Let's see, big surge. And the big surge happens right here at market open. This was it. Okay, big sell-off. Let's see. Notoriously, let's see, right here at market open was the dip. Okay, so we've seen a lot of times when we're in a bull trend, what we'll see is a big sell-off right at market open, something like this. That's a big sell-off at market open before a recovery. Now, it doesn't look that small, but it actually is. You see, this swing right here that we trade, this tiny little swing, this is basically a couple hours on a day of the week. And what happens is you'll see a big sell down at market open a lot of times. And why we look for that bounce, we'll look for these 5 to 7% swings that happen very small increments, but they happen on an uptrend. And when they're holding above that EMA, or they're holding above that average, we have some of the probability in our favor. Now, right now, probabilities are that this company, from a technical perspective, has a support here they're looking to bounce. From a market perspective, they have a lot of tailwinds coming up in the next month. Number one, they're a defense company. So when the government opens back up, this company is going to see more demand. It's just going to positively impact them when the government opens back up. The second thing is the big beautiful bill. And the big beautiful bill has a lot of favorable conditions for any defense companies. And the third thing is they have their CEO, who was previously commissioner of the U.S. Customs and Border Protection, and then was also the Secretary of Defense, Homeland Security. Secretary of U.S. Department of Homeland Security. And so because their CEO is there, that brings us to number 4, why they have some headwinds with them. Most small cap companies do good when the markets see the rate cuts, for sure. And I see Duke says, sound like it's worth holding to me for the long term on LAES. Alex says, hello, Will, hope all is well. Will your short position be changing in the week ahead on RZLV as well? Anyone speculating on any ripple effect of the 3i Atlas on space investments? That's a really interesting point on the space investments. Space investments in general look more solid right now because they have the actual revenue kicking in 2024, 2025. We've seen actual revenue for the majority of space companies. When it comes to the short position on RZLV, I'm still holding that position. And I'm shorting it because they have more liabilities than assets. That's why. And I think I like to short companies that have that kind of profile. I don't like to, actually. I should rephrase that. I've found the most success in shorting companies like that. Primarily, the reason I do it is because it seems like kind of there's less friction in the short. If there's like one thing that you'll hear is like we're talking about probabilities, like stacking probabilities. Like we could talk about Big Bear AI, and we're looking at, they have their Veriscan, and they deployed their Veriscan into airports, and that's a probability that's powerful because we could look at the World Cup coming up. And then you might also take another probability that is like, okay, but their revenue is still like flat and they're looking to increase it, but they haven't increased it. And that's a probability that works against them and probably gives them less of a chance of growth. But then their balance sheet went up. That's a positive probability. And so like, for example, like RZLV, while I'll short it, one of the biggest like probability finders is going to be in the financials. It's not really, it could be in the product. It is in the product. It is in the charts, like it's there, but the financials are almost always where the real answers are. And I know that like, it's crazy to hear that if you're watching YouTube, because like, what do everybody spends the most time on the chart, right? They're like the chart, and did you see this news? And they're probably even showing news articles that are fake. Like honestly, so many news articles are fake. That's why we only go to the source of the press releases of the companies. And some people say, Will, did you see this article? And I'm like, no, because it's not legit. Probably, maybe it is, but we just can't take the chance, too many times it's been not legit. And so the same thing is true with like when we're shorting a company. There are certain things that like you find that become good indicators for the direction. And for RZLV, I mean, for me, it was just seeing the more liabilities than assets. Like that's a big indicator. And Alex says, I've been bullish. I'm paying for it. Time to bow out soon if you don't change your position. All right, we can take another look at RZLV, but like I don't want to be biased, right? Because I have a position that's basically the opposite of your position. But ultimately, like, dude, like, I'm telling you, you know, it doesn't, like, the biggest investments that I've made have been in companies where, like, you're looking at something before everybody else does. And sometimes that actually does mean, like, our biggest, you could see, like, on Rigetti, everybody was saying short quantum, and we're investing in quantum. It's one of our top gainers this year. AMD, like, people were saying AMD was the advanced money destroyer. They literally gave it like a name, advanced money destroyer. They gave it that name. Everybody was calling that. And we were buying it at 75 bucks a share, and I was making videos about it because I felt most investors would want to know that. Because if you search AMD stock Starlink on Google, I was saying every company that's partnered with Starlink has gone up. And anyway, you can see our videos there and everything. So my point is that, like, that was in a moment when people were betting against the company. And so the same thing is true with Tesla. Like, everybody was shorting Tesla into the 2015s, 2000 up to 2020 and trying to put the company out. I have a friend that invested in Tesla when we were in middle school. It was like 30 bucks a share, and he got me into it, and he's one of our good friends. He works at Rocket Lab, actually. I lived with him for 2 years while I was working in finance in Boulder, actually, in Colorado. And so, and we grew up in California together. We went to school together since like second grade and stuff. So, like, literally, I remember him telling me, like, everybody's betting against this company. And then he would tell me, but look at what they're doing. Like, this is revolutionary. This is going to change the game. And so, like, honestly, when you see someone like me bet against a stock, it doesn't mean that I'm right. Like, I could be wrong still. Do I think I'm wrong? No, of course not. Otherwise, I wouldn't have the position. But we can open it back up. Let's just take a look at the company again. All right. And before we do, okay, I'm going to actually start with the company's products before we get into the financials. Okay. All right. Resolve AI. And can you tell me, Alexander, what's the reason for investing in this company? Like, tell me why you're invested in the company, please. Steve is here. Steve says, keep in mind the price of Bitcoin will be affecting value of Wolf and other Bitcoin miner HPC companies. A Bitcoin bull run will have a significant effect. Great instincts. However, it's not correlated. It is not correlated. So it's a good thing to think about. It's a factor, a probability, but it's not correlated. It's like MicroStrategy. If you believe in Bitcoin, buy Bitcoin. Don't buy MicroStrategy, because they could sell stocks in order to buy more Bitcoin, and they might have a big asset balance sheet, but they're not bringing value to the market in a certain way, and their stock actually goes down while Bitcoin's reaching all-time highs. It's the same thing is true as well for like Bitcoin mining companies, things like that. Like, they are not correlated. And so it's a very dangerous game to, like, if you believe in a company because they're acquiring Bitcoin or something related to that, it's almost always going to be better to like buy the underlying asset that you like that they're acquiring, if that makes sense. But yeah, Alex, can you let me know what's the reason for the bullishness, man? We're sitting here, you got 87 other people waiting for you to answer this bull case right now for Resolve AI. All right, let's take a look at the company. Trusted by leading brands. Targets, Men's Warehouse, The Warehouse, Exchange, Rakuten. Okay. Let's keep going. Conversational AI. At Resolve AI, we're transforming landscape with AI first solutions. I'm looking to spend this much money, okay? Oh, okay. That's pretty cool. So now you got the AI that when you go onto the website, the AI is asking you, like, can I help you find anything today, sir? You got the AI that is the person that you're like, no, I don't need help finding anything. Okay. So they're doing that. Okay, cool. Brain Power, they have this LLM developed specifically to address the unique needs of retail and e-commerce. Zero hallucinations on your e-commerce content. Okay. Customer activation, increased search and discovery. Okay. President of EMEA, the Google Cloud, has a testimonial for the company. Resolve's Brain suite of AI solutions will help retailers deepen customer engagements. This is really interesting because you got to wonder how they get these testimonials. Makes me want to like, we have different data partners for our company at Mercatus, where I was just doing this analysis, and I'll actually pull up RZLV. And I accidentally spilled my orange juice all over my keyboard on accident. Big oof. Big oof, my friend. I should probably clean this up. Wow. Did not mean to do that. Sorry, guys. Detour. Comment the word. Comment your favorite drink down below. Comment your favorite drink down below. What is your favorite drink? Comment it down below. And then we'll get to it. Sorry, guys. Dude, I straight spilled so much orange juice. All right. I know my keyboard looks very clean, but I think that down below, under the letters, there's some serious buildup of some different drinks throughout the year. But it doesn't stick or anything. Actually works quite well, so. Shout out to Apple, I guess. Okay. Okay. Big oof. And we're good to go, guys. Sorry about that. So, and that is the stock I accidentally searched. RZRET. This just became like a comedy show rather than a stock analysis. Okay. RZLV. Okay. Crown and Cranberry is the go-to. Okay. Very nice. Very nice. Okay, so RZLV, we're going to pull up the analysis. Let's see what we got. I'm curious on this one. Let's get the analysis going. RZLV. So anyway, Big Bear AI, we're bullish. We hold the long-term positions. It's been holding around that 640 support. We're going to see if it holds 650, excuse me. RZLV is the one that Alexander and I are talking about. And he says, ringing in my ear that it says it's something more than what it is. That was when it was higher than it is. So maybe a bear opportunity than a bull. Haha. Rest in peace to the orange juice. A sign for RZLV. No, let's keep it here. Okay. I was looking for this initial sell down. I thought it was gonna not break out. And I was wrong. I thought that it was gonna continue to sell off, and I thought it was gonna sell from $3 down to $1. That's what I thought. Now, that's not what happened. It surged to $8.45. So once it got up here is when I started shorting the company. This is when I started shorting the company. And so now it's down to, $4.85. Now, I didn't start shorting it before, thank God. But when we look at the company's growth, integrates with your tech stack, they have some really interesting approaches. But the reason I was saying is like, how hard is it for them to get these they have some testimonials from Microsoft and Google and some other testimonials. And I thought, interesting that they have those testimonials, because for me, we work with data source partners at our company where I just got this analysis that projects that Resolve will go down over the next week. Uh-oh. All right, Alexander, let's see how bullish Resolve is. Next week, negative. Next month, oh, next 3 months is negative. Next 6 months is negative. Oh no. All right, even my AI company tool, which doesn't always show negative over the next year, is showing negative on RZLV. Okay, you know what it is? It's because I've weighted the tool to do analysis the same way I do analysis. Now, of course, there's certain things, like, for example, it has a 50% confidence score. It's a little bit down on the confidence, but it is projecting a 10% drawdown over the next year. And so the reason being is, like, we can look at the AI that they're building and say, that's really cool. Kind of what they're doing, and kind of see the brands they're trusted by. But that's all great. But my question is this: if they're trusted by Dunkin' and BJ's and Kohl's and RS and Liverpool, and they're trusted by Target and Ziff or Kith and New Era and these companies, and they got strategic partnerships initiatives with Microsoft, Google, why then are they losing money? How do they have all those partnerships and they only generate $3 million? Like, I'm actually not saying that from like a negative connotation level or anything like that. I'm actually saying that because I'm genuinely curious. I'm genuinely curious how you have all those partnerships and you still lose some money. And then they've grown to $1.5 billion market cap, and they're losing about $172 million in the last year. And most high-end software developers made more money than they made the entire year in revenue. They made $187K in 2024. And so then you look at the balance sheet here, and they have $57 million in liabilities. So they have more liabilities than they have assets. Assets are not 57 million. Assets are at 19 million. So they have 57 million in liabilities, 19 in assets, which indicates that at any time, if they owe money, they're going to be in a position of stress, very much so. And so the next thing to kind of watch with the company then would be to essentially look at, where they're positioning themselves from an investor standpoint. Because if we look at their press releases, you'd want to know, are they raising money? Minimal dilution from foundational acquisitions. They're on track by validating a path to making more money. In September of 2025, they closed $200 million in financing. And then on the 24th, another $200 million. So they raised a lot of money, actually. They raised $400 million. So in the next quarter, and this is where Alex could be right about the company. If they come in and they have that $400 million in assets, what's going to happen? Now they got $400 million in assets, okay, and they're only got $57 million in liabilities. Now that $1.5 billion market cap is going to look really small. They should look more like a $4 to $5 billion company. And so, yes, Alex, their recent raising, if you can verify that they did it successfully based on their news of what they did with institutional investors, that's directly from the source. They say that they 200 million private placement from institutional investors involved in prior capital raises. If that's the case here, they could be looking at what would be essentially a market cap much greater than where they are. And they might be a $15 to $20 stock. And so it's not bad, man. Like I said, it's just the near term, I guess. It's just been the near term. But excellent job in identifying the opportunity for that reason. Because again, if that plays out, they see that reflect in their balance sheet, the trend won't look like how we have it. It will look like this. It looks something like this. Just like that. About a 50 to 80% increase up into $8 a share. All right, so you got JZev says Powerade. Oh man, I love Powerade. Solo Slick says Yoo-hoo. Dark roast Starbucks with a little milk. That's pretty cool, Dylan. I'm more of like a light roast guy because I like it like really strong. JZev says definitely coffee in the morning. I'm actually there with you. Crown and cranberry. Okay. You think Microsoft is going up big like last quarter? Yeah, I mean, they're a big stakeholder in OpenAI. It would make a lot of sense. They would continue. Long-term positions look good there. Grand Malo and tequila. Nice, man. Awesome. Hibiki. Sugar-free Hawaiian punch. You guys got quite the... Thank you for filling that out, guys. Appreciate it. So we got to go over some big companies. Again, we appreciate you all. Thanks so much for tuning in. We did go over TSSI earlier there for Itzevish. We went over that earlier. Orange juice, you know, what I like about orange juice is the calories. Drilly says Dragonfly. Kind of an interesting one in the aviation market. If I'm not mistaken, though, if we look at the... Well, let's see if I could spell this right. D-Pro, Dragonfly. Yeah, they're doing good. They got more assets and liabilities, at least. Still small market cap. They're more in the drone market. They've seen some trends. You can kind of see their overall direction. D-Pro. If we go over to our aviation watch list, we could find them there. Aviation tech. Oh, maybe they're in the drone tech. There they are. Yeah, so we saw them break out recently. They're continuing to break out. They got a support level around $8, $9 a share. And if they're going to hyper bull trend, continue up, next target around that $12 to $15 range, about a 50 to 60% increase. Watching on the conservative side is that support level right here around $8.50 to that $9 support level. They're currently at $9.50. You want to watch them hold that $9 range. If they do, they're obviously targeting up into that $12 to $15 range, about a 50% increase. If they can't hold there, you're looking at a potential sell down in that $6 to $7 range, which you wouldn't want to be a part of. But yeah, I have some studies come out with them recently. They did get some more funding and in the drone tech market, it's a nice market to be watching. I would just see if any opportunities present themselves. We'll be watching at market open. Definitely would love to see you there. If you guys want to tune on into our daily live trading, it's the second link in the description below for Stockmate. Would love to see you there. And you get our entries, get our exits. You can see how we invest in the markets in quantum, AI, space, and tech stocks Monday through Friday. And you get a reminder in the morning. And I'll also send you a free t-shirt anywhere in the world. You get a Stockmate t-shirt sent over to you. Alex says, Trump raised tariffs 10%. See what will happen Monday because of it. Exactly. Let's see what happens. Maybe opportunity. So guys, thanks so much for tuning in here on the Saturday afternoon. I hope you have a great rest of your Saturday. Enjoy the rest of your night. Thanks so much for tuning in. Alex, good to see you, man. Drilly and Megan, Oscar and Jacqueline and Duke, two brothers. Huncho, thanks for tuning in. Chokta, Jzeb, Dylan, thanks for tuning in, man. Appreciate you. Appreciate Jzeb. Solo Slick, thanks for tuning in. John and Steve, appreciate you guys. Ron, it's good to see you. Dulcie Prayer, good to see you. And Anna Cardoso says, hey, Will, have you seen BLZE data stock? Looks very promising. I didn't see that one. DLZE. I just got to check it really quick. You got my interest. DLZE. I don't see it. BLZE. BLZ. Back Blaze. $589 million market cap. They're bringing in 36 million a quarter, and they're in the data center market. And their total assets are at 160 million, and their liabilities are at 90 million. Yes, I love it. I like the small market cap. They're definitely building some momentum. Wow. Yeah, when it comes down to the data center market, I'd love to see companies like that. Thanks for tuning in. Appreciate it, Anna. Always good to see your stocks. I joke, but literally the best stocks come from the amazing investors here in the community. Thanks, Jai. Thanks for tuning in. Appreciate you guys. BMC and Azaline, thanks for tuning in. Johnny, good to see you. Short Buzzy, Ron, appreciate you all. Luis, good to see everybody. Awesome, guys. Akil, thanks for tuning in. Redwire, yeah, I've got Redwire long-term positions there. They're a company we'll be watching throughout the week. We'll have a video out tomorrow on them. I will have a video for you. We'll get analysis out. They got an $8 support. They're holding at $8.05 right now. They are moving very slow. I agree. And ASTS, kind of same deal. They were overvalued as far as valuation, but they signed a deal with Verizon and AT&T. And just to know about ASTS as well, if you're not familiar, they have a their technology is 5G space internet from space, and you can see they have these satellite things that open up like this. I had a friend that used to live with he works at Rocket Lab again. He used to work with ASTS, and we used to drive to work together all the time because we were going to work for. I was doing financial consulting at a company I don't work at anymore. It was before I moved back to California, and he moved back to California too. But this company discovered it at around $3 a share. I don't know what they're at now. Are they around 40 or 50? ASTS. Where are they at? 74. Oh man, let's go. I have some small positions over there. I haven't looked at them in a long time. When did they jump to 74? Oh my God, in the last month, they jumped from like 36 up to 102. That is insane. Anyway. Wow. Yeah, last we checked, they're at the support level here. Jeez Louise. Okay, cool, guys. Well, hey, I appreciate you all. Have a good rest of your day, and I'll see you in the next video. Again, if you want to join us at Market Open on Monday, would love to see you there. We do have that sale open for the data center boom sale. It's the second link below for lifetime access to Monday through Friday. Love to see you there. Thanks so much for tuning in, and I'll see you in the next video. Take care, guys. Thanks.